Good day, traders. What's going on? This is Prof from Benko FOREX Academy speaking. Let's take a look at V50s. Before we do that, I just want to give you a gentle reminder to subscribe to the channel. Don't forget to subscribe. Make sure you subscribe to the channel and also turn your notification button on so that when I upload these beauties, you see them well in time. So what we want to do now is we want to dig deeper into V50s once again. We just start with a recap of what we had the last time we had a video. The last time we had a video, I had indicated these order blocks here, expecting V50s to come. We were around these areas where we were saying that V50s is most likely to either respect this price action or it will from these areas come back to take out the lows, referring to these equal lows that are here. Let me just highlight them so that you see and we talk the same language. These relatively equal lows that are given here, I want you to see, to just watch and see how it completed all of those objectives all together. This video might be a little bit lengthy, but bear with me, just be patient. I want to take you through this. Maybe you might learn one or two things to add to your strategy if you are not planning on changing the strategy to this Benko's Forex strategy that we use here, a hybrid of Elliott wave and ICT. So these were the order blocks that which we were referring to, and we were expecting this. We didn't have this as marked, if you still remember. We didn't have this as marked because it was not yet as clear what price action was suggesting. The footprints of price were not yet revealed, but later they were revealed, and we want to see how they were revealed and what it means. If you want to check this, I'll make reference to V100. That was V100. Yes, I think I will refer you to, when I'm now doing a video of V100, I will tell you where to compare, which part of this price action to compare to V100. This once happened again on a V100. Even if you do your back testing of the two pairs, you are going to see what I'm talking about. If you are a price action trader, if you don't just follow indicators alone. Indicators are not bad, they are good. Any strategy is good, it's only that I don't use them, but they are okay, they are good as long as you're making money. Then what's bad? Let's continue with V50s here. Last time I had pulled this price action because the right side was not there yet, so I had pulled this price action and flipped it together so that we would have this price action on this side. Look, just take a look, just look how this has just been successfully filled. But what we were expecting was a flat with an over the bottom leg, which would then come to take out this high before this leg would be given. But I just want you to look at this. Let me push this aside. Let's start this together. From price action perspective, from technical analysis, pure price action, what do you see here? What exactly do you see here? Look at that. 1, 2, 3. Look at this leg and look at this leg. If you can just take a bit of look there, you see that it is the same price action given here, but this has been compressed and it's not as long as what we were expecting. But this is the same price action that we're given. If you then dovetail that with the Fibonacci, look how perfectly it is fit into 0.786. Just look at that, look at that. So exactly what we were expecting happened, but just that the leg was not as long as we expected, and we were not given again that deeper correction, forming a mini inverse head and shoulder that we're expecting there. And if you go back again, I referred you to compare the price action. Let me just squeeze it a bit. I referred you to compare the price action here, the 1, 2, 3 wave relationship. This is too big. Let's change it. Looks better. I referred you to check this against V75. The same behavior that we got on V75 is the same thing. It is the same thing that we are just experiencing, but on a small scale. Why? Because the participants are now different. The people that are participating are now different, and everything else is now different. So we would expect that to happen. So now let's just zero in on this price action from this point here to where price is right now. If we just study this together, after this we were expecting this to come back to take out the lows. Look what happened there. We were given the leg and it came back and took out the low. After taking out the low, we're given an RRT candlestick formation there. Look at that. Look at that. It's not an RRT, rather it's an evening star. Look at that dodge in between there. Look at that price action. Look at the inverse head and shoulder formation being given there. It's just too perfect not to trade it. It's just too perfect. So if we just look at this price action, you see that this now is appearing to be wave number 1. After this correction, it appears that we are now given another wave number 1 here with an A, B, C correction up to this point, this being the last point of the correction. Let's just do some measurements together there so that you see what's happening. Look at that, 0.618. Look at that, 0.618. So we're given this ABC wave up to this point. So what we have now, what if this now stands to be true, then what we are in now is a third wave. And remember, the third wave should not be the shortest. So this must be a third wave that we're experiencing. And this, if this is a third wave, then this is wave 2 of a third wave. So this must be wave 2 of a third wave. Let's just measure something there. Let's just measure something there and see what we've got. Not exactly 2.718. Why? Is there an override? Let's now look at price action from the beginning of wave number 2. So of wave number 3. So this is the beginning of wave number 3. If I take this just to see what's happening and clone the line and put it on top of this, look at how price is respected, has formed that new channel there. So this now, as it is okay, though it's not as deep as 0.786. It's in between 0.786 and 61.8. And if we zoom in a bit, what do we have here? Let's just move this aside a bit. Gotcha. I gotcha. Look at that. I gotcha. Look at that. Look at that. Change the color. Look at that. Break. Look at that. Retest. What are we expecting? Impulse. That's all we are expecting now. We're expecting an impulse. Are we going to get a deeper, another dip into this before we go up? well, the market will tell us that. But if ever we are going to get that deep surge into that, then that deep surge should not violate this last red candle that you're seeing here. It should respect this order block. So if you are to get that dip, which is rare because of these candlesticks here that have been formed here, what I would expect now is an upside move. To take out this high to this order block to these order blocks, and maybe then you can get a correction. I wouldn't expect this to come back again. It's a rare. So this is actually a buy trade that we are being presented with here, that we should have taken on this candle. Let me show you how. This is how you should have taken the trade. By just when the price just balances off this gap, because it had left a fair value gap here. Can you see that? So by the time it balances off that fair value gap, that's when you would have taken the trade to the upside of that. Don't worry, I'll talk about fair value gaps, I'll talk about order blocks, I'll talk about propulsion blocks in another video. But for this one, let's just concentrate on analyzing this one. So what are we expecting? Already I've told you we're expecting to be buying this. Let's buy V50s. We'll be buying this trade for this week. We'll be buying this trade for this week. So this is what we are expecting on V50s. Don't be left out. Don't be left out on these big moves. This is a big move. We were expecting this to take us to these levels here. Let me pick it too. First level being this one, rather first here on the high, second, and the third level being the channel, the new channel that has been confirmed there. So don't be left out. Make sure you take advantage. Make sure you take advantage of these big moves and maximize. Patience is key. If you are left with the trade, don't try to catch it along the way. It's not a bus, my friend. You'll be destroyed. You'll lose your capital. You'll be emotionally wrecked. Don't exercise patience. Just don't just jump into these trades. These are volatility indices. They will kill your emotional balance. Have a peaceful week ahead. We'll also send analysis for other indices. Just make sure you subscribe and hit that notification button. Prof signing out. Remember to join our social media platforms, WhatsApp group, Telegram. A lot is happening there. I'm not yet posting currencies here, but in Telegram channels I'm posting currencies. So make sure you you just join those groups, so that when even I send analysis on currencies, you will get it firsthand. Have a peaceful week ahead. Prof signing out.